Thank you, Tim. Well, thank you everyone for listening in. It's my pleasure to be able to share a bit about eCargo on this webinar. So I guess we can go right in. Next slide, pass the disclaimer, please. It's simply put, we are a growth accelerator. And what we mean by that is basically any brand or retailer that wants to trade in Asia, in particularly China and Southeast Asia, we support them. And we leverage it through basically three main service areas, right? Leveraging our distribution and trading capabilities across our 120 team member in China, Hong Kong, and Australia. We provide a wealth of end-to-end services, and then we also provide technologies that we enable that to really accelerate those sales in those markets that we trade in. Our company was founded in 2014, and we were listed at the end of 2014 in the ASX. And it was really on the back of one main theme, is the Asia markets will grow on the back of rising income, and rising income would generally have a higher demand on quality products. And brands that are in Australia or in other parts of the world will really need the support to get into these markets to operate, given that the complexity, the different cultures, languages, and more. So we can move to the next slide, please. So what are our services? If we look at really the two main services that we provide, one is what I call distribution and trading, and the other one is what I call e-commerce and digital services. Around digital distribution and trading, we basically split between two. One purely online, and the other ones that we will actually support brands to go into offline distribution into brick and mortar stores. Online distribution is really where a bulk of our revenue is generated from, as we trade both cross-border and on domestic e-commerce platforms. There's over 30 different platforms that we trade on, whether we help the brands set up their own flagship stores or they trade through the stores that we operate on. While distribution and trading for offline, we have about 4,000 point of sale locations that we help support brands to get in. And these include supermarkets, convenience stores, department stores, specialty boutique stores across China, Vietnam, and Cambodia. And the whole idea for distribution and trading is we work on margin, right? Brands have product, we acquire them, and we then trade into those markets. But trading is only one element of it. You also have the market activation, the marketing, the branding side of it. That's where our digital services come in, where we actually either set up stores, we do provide marketing services, we provide content services, and those are on more project fees, retainer fees, and commissions that we generate. Next slide, please. So how does that look like? Since 2014 till up to now, we've been really fine-tuning our services and to really create one end-to-end value proposition that we can offer to our brand principals. On one end, it's really logistics and warehousing. That's really where we started our business, given that we were backed and we spun out of a larger organization called Cargo Services, which is a freight and logistics partner. So logistics and warehousing is one element that we provide, and that includes freight, overseas, local warehousing, and importation. We provide custom clearance services. Those are actually more complexity comes in because each country has different rules, different regulations, different tariffs, import duties, as well as labeling requirements. So we have a team that really supports all our brand principals on that. Our extensive distribution network, we have now over 120 distribution partners that we work with that generates over 4,000 point of sale locations across China, Vietnam, and Cambodia. These point of sale locations give us access to over 300 million people within Asia. So we actually sell products through. And these are just point of sales in brick and mortar. So we also have online channels that we sell through, which I mentioned 30 different platforms, as well as consumer to consumer stores, which is these small community stores that other people set up, and those are over 2,000. So we have different ways to help activate through our distribution network. E-commerce development. So we provide setup of stores, whether your own brand site platforms on Salesforce Commerce Cloud, Shopify, or even on set up your flagships on marketplaces. That's kind of we provide our brand principal with that service. Market activation, growth optimization. Really, you can't really sell anything unless you have marketing expertise. So we have a strong marketing team that sits across different countries that really helps our brands build up their branding, get their message out, even do trade marketing to really support the brand growth in those areas. Channel management service, we have a team that sits in China that provides customer service, operational work 24/7. The idea is really to support our brand's underlying customers to ensure that they are handled properly, the experience is well managed, and so that they can continue to grow nicely. And then lastly, all this comes down together is really generates a brand growth program. And the idea is really any brands that get into these markets, they want to grow relatively quickly. And we have a structured program across all our services to bring them and to help them grow in the markets, and particularly China. Now, the last 2 years has really helped us in the sense that, given COVID, online have really shifted in terms of customer behavior. So in terms of online generation, as well as how the need for our services have become very highly sought after. Next slide. So what does that really mean? How do we really help our brand principles? I summarize this with basically 3 things. When we look at the supply chain, one area is supply chain efficiency. Through our services, we're able to really support them on better cost management around how to move product from A to B. So whether it's from logistics, we help them with better costs, better structuring, better management in terms of shipping, in terms of how to consolidate products into a container. We provide those cost savings to the brand principals we work with, as well as fulfillment and inventory management, how to manage sell-through, how to look at where the product should be based in order to get the greatest sales that we generate using the solutions that we provide. Distribution efficiency, because of all the distribution channels and networks that we have, we really accelerate a brand's position when they get into the markets that they want to trade in. So for example, in China, any brand can technically go in and try to sell themselves, but working through us, we can immediately get them into offline retail stores. We can immediately get them onto online platforms without such a high level of investment that's required. We also drive really high sell-through rates across the markets that we trade in. So that really helps the distribution efficiency and generate that revenue for the brand principals that are working with us. The third area is what I call capital efficiency. Ultimately, every single company we work with, besides working on supply chain and distribution, this always comes down as cash flow. How do they actually generate better cash flow efficiency within their business? And I guess the beauty of working in an end-to-end business manner is we actually have a full visibility on the sales, on the product movement, the trading aspect of our underlying customers that generate quite enough data that can provide to financial intermediaries and fintech as alternative credit data for them to actually have better capital access. So I'll touch on that a little bit on how we actually do that afterwards. Next slide, please. So how do we came about? Our business, when we first founded in 2014, was really focused purely on e-commerce. But as the market evolved, we start making acquisitions into market that really generated a full service value. So in 2018, we acquired Metcash's export business, and that immediately overnight gave us all these offline distribution channels across Asia, and that gives us the contracts with distributors as well as supermarket chains that we can actually sell through. What we realized was that purely selling on online worked, but it wasn't enough in terms of getting the product into the consumer hands in a greater manner. So we needed the offline distribution side as well. So hence when we make that transition, we make the acquisition, our business starts growing at a more rapid rate. Where we're trying to move now is we have the distribution channels, we have all the pieces together. How do we really truly link all the data and the technology together to really support our customers with better decisioning, so that we can grow and help them grow even quicker in terms of their sales that they sell into those markets. Now we work in really 4 main categories in consumer goods. One is baby and mom products. The other is health and wellness. Third is our personal and beauty care. And then last one is premium food and beverages. These are really the 4 main categories we focus on, and those are brands that we support as well through our journey. Next slide, please. So what have we achieved so far? Last year, if I can highlight some key figures, we generated our first net profit after tax for the group since we listed of Hong Kong dollars 900,000 Australian. Sorry, 150,000 Australian. EBITDA, we grew 21% compared to 2020 to about 9.2 million Hong Kong dollars, which comes down to be 1.5 million Australian. We launched new tech platforms. The idea was that we don't purely just want to be a service partner. We also want to own our own platforms to support. So we launched one, it's called JJX, which is a B2B cross-border trading platform, leveraging any brands that are in Australia that wants to get access to our distribution network and just list their product on, and then they can already trade while we provide the services in between. We also launched a cross-border fine wine platform. It's a marketplace. And we launched that in October last year. And since then, we've grown now to over 15,000 SKUs, selling fine wine into the Chinese consumer via cross-border e-commerce. We're also able to reach profitability across all our business units, including our trading and distribution business, primarily due to higher margin products that we focus on, as well as better cost management. We launched into new product categories. I list here 2 new brands that we took on late last year, which we started the business this year. One is called Ella's Kitchen, which is in the baby and mom category. The other one's Fentimans, is a premium food and beverage a brand that now we trade in Asia for them exclusively. We launched in terms of, we've really fine-tuned our value proposition so we can fully integrate our customers into our value chain within eCargo. Next slide. What I want to highlight here is really 2 main key indicators. One is our gross profit. We generated our highest gross profit in company history since we listed, about 88.6 million Hong Kong dollars. That comes down to be about 16 million Australian. As well as our inventory turnover, because we are a trading and distribution business in nature. So generally, our inventory turnover is a very important measure. We've been able to really lower that since 2019, which was 97 days to 35 days, just because now we have better focus on products, we have better inventory control, and we have better sell-through on this. Next. So where are we going for the rest of this year and onwards? Really 2 main strategies that eCargo has been focusing on. One is supply chain digitalization, how to really work on the supply chain and digitalizing it, because cross-border trade has always been very manual and very troublesome. And we use our different experience and our technologies to support that. Streamline and accelerate. We will continue our partnerships with high-value brands and expand into new regions in Southeast Asia. So that's kind of where we're repeating our model that we've done well in China into new markets. Next slide, please. So these are the 3 platforms in terms of digitalization that we've been supporting. One is JJX, which I mentioned, a cross-border trade platform. We've generated over about 35 million in sales Australian last year since we launched the platform. PJF Wines, we've now grown as a cross-border wine platform with 15,000 SKUs. Average order value is about 2,000 RMB, which is about 450 Australian dollars per an order that's generated. And then our data-driven funding platform is called Flow, that we're now partner with banks and fintechs to provide the data that we're able to generate to support our brand principles with funding needs. I guess it'll be the last slide. And the last slide here is simply where we focus on in terms of our Streamline and Accelerate. There's really 3 areas. One is our category specialists. I mentioned the categories that we'll focus on, market expansion into Southeast Asia, as well as brand equity. We're going to go upstream now that we have all the pieces together, and we'll be starting to invest into brands and own the brand piece as well, so that we can actually facilitate more value for our group and eCargo. And then the last slide will just the brands that we work with, including Blackmores, Fonterra, group in Australia. You'll see some brands in the UK, and then some of the channels and partners that we work with on the right side. So Tim, I'll stop here. Maybe we can just go into questions.
Yeah, thanks, Lawrence. Quite a few questions. Did you actually say $16 million net profit in 2021 via market cap of around 8 million? Is that correct?
Sorry, I'm Tim. Yeah, I missed the first part. I think I got an internet.
Sorry, just on the conversion of the Hong Kong dollar profit in 2021. Did you say that was around 16 million Australian dollars? I'm just looking at your market cap around 7 or 8.
Yeah, no. So our gross profit was 16 million. Our EBITDA was 1.5 million Australian, and our net profit was about 150,000 Australian.
Right, and is that because you're taking the margin on the sales? Is that right?
Correct. We take we earn a margin on the products that we trade on. So typically our margins ranges between 40 to 50%.
And so where does so we've seen a lot of the big retailers holding inventory, like Target, for example, has had some profit downgrades in the US because they're holding a lot of inventory they've bought ahead of the supply chain. Who holds the inventory risk here in regards to this model?
Yeah, so our business is a little unique because we work with a lot of sub distributors, and we act as the exclusive distributor. So generally, the inventory risk is actually passed to our sub distributors. So generally, we don't carry much stock. We actually trade all B2B deals, and then we just basically manage the logistics and the credit management between our sub distributors and us.
So when you talk a sub-distributor, that's the distributor of the brand before they come through your platforms?
Correct. It would include retailers, right? Some of the ones that live here on my right side are sub-distributors. We also have regional distributors. Basically, they will manage a particular region within a country, and they have to acquire the products from us. We will manage the brand marketing. We will manage the distribution management. We will manage the logistics to ensure that they get the product on hand so that they can trade.
Right, and so what's the kind of, a lot of supply chain issues? What are the largest kind of bottlenecks for brands in terms of their expansion into Asia?
Yeah, I think this is one of the reasons why brands and retailers like to work with partners like us, because when we look at cross-border trade, one is, as you mentioned, logistics and supply chain. Given the whole disruptions globally now, they really need a partner that can move product. And where one of our advantages is because we are one of our largest shareholder is a logistics and freight company that's one of the largest privately held one globally. We're able to have access to a lot of freight bookings, scheduling in a more favorable terms, as well as cost on that front, so that we're able to really pass that towards our brand principles. And then as well as when we're looking at for brands that want to get into a country like China, they're talking about language barriers, currency management between renminbi and Australian dollars, and import rules, labeling rules. All those becomes complexities. So hence where we will help them with help them alleviate those problems as a solution provider.
And do you always have to work with that sub distributor? Have you got examples where you work directly with a brand?
Yeah, so so on one end we work directly with the brands, right? Because we are their partner, while the sub distributors are the ones that we would distribute product on. So we bridge the gap between the brand and our sub distributors. Now there are places where we will go direct to consumer, that we sell on behalf of the brand to the consumer, is where we mostly focus online. So we would generally help them set up their own flagship store online, and then we would trade direct to consumer that way, not leveraging a sub distribution for that management side. So those are different ways that we operate. So for example, if I can take a brand like Ella's Kitchen, we operate all their online channels direct, so we sell direct to consumer.
Oops, looks like we got an internet issue.
They're actually the top selling baby category product on a platform like Tmall Global.
We just had a bit of an internet issue. Just last question, Lawrence. What sort of opportunities are you prioritizing for the rest of 2022 and moving forward?
Yeah, so one of our main priorities right now is actually looking at brands that we can actually acquire. We've always been a service provider, and we have all the pieces together that we now know how to get a brand up to their sales and generate that value really quickly. We also want to be a brand owner as well. So that's where we're looking at different types of investments into different brands that are within a good size, that we can take into our ecosystem so that we can grow even more rapid.